Yeah, it should go on the other side.
Mics are on now.
Well, hi, everybody. I have $1 million. So it works. It's probably as valuable as actual monopoly money. OK, so our panel is on investment and cryptocurrency. We have a pretty all-star panel, very wide area, which we'll cover. My goal really as a moderator is to keep it focused and keep it on track. So we'll get off the block right away. Everyone will introduce themselves and tell you about their specialization, and then we'll go to questions. Why don't you go ahead?
Thank you. Hi, I'm Yves-Laurent Kayan from CoinPlus. We are a startup based in Luxembourg, and we are trying to get an agreement on the payment institution, as to address the market of the e-merchant and the B2B e-commerce.
My name is Kevin Beardsley. I spent last year as the Director of Membership at the Bitcoin Foundation, and this year joined Elliptic. In Elliptic, we're setting out to build the leading custodian bank for the blockchain. So toward that end, all of our internal processes, including security, are audited by KPMG, and all of our client deposits are insured by a Fortune 100 A-listed insurer. Today, we work primarily with Bitcoin, but we're really interested in doing custody solutions with Bitcoin 2.0 technologies as well. So.
Hello, my name is Pavel Kravchenko. I'm a cryptographer by my education. So last year, I was with Stellar. This year, I worked for a company, a startup called Tembusu Systems. We built a system that allows you to combine a KYC and anonymity at the same time. So users may be registered, but at the same time, there is no way to understand their spendings, to track their payments later on. I'm also a Bitcoin enthusiast. I created an academic course about cryptocurrencies. I've conducted it 3 times in Ukraine, from where I'm originally from, and Israel recently. I do a lot of seminars for free about Bitcoin for just any interested party, trying to grow the community from grassroots. Thanks.
I'm Christian Jacken. I have a background in economics, philosophy, and psychology. Unfortunately, that didn't help me with my nervousness. In 2004, together with an American hacker, we developed a concept for e-democracy, also with crypto voting integrated, peer-to-peer, decentralized e-democracies, a system called liquid democracy, which later became quite widely known in Germany in connection with the Pirate Party. Unfortunately, some things were changed, and it didn't work exactly out as before, but we have new possibilities now with blockchain technology. This is one of the things I'm still working on. I'm also a libertarian advocate of cryptocurrencies and alternative currencies.
I'm Timo Schlaefer. I'm one of the co-founders of Crypto Facilities. We run a Bitcoin derivatives trading platform, which just went live last week, actually. We are based in London. We are registered with the FCA. Our team is made up of finance people from the traditional finance space. Our co-founder, who can't be here today, is Jean-Christophe Laruelle. He is from BNP and Société Générale, a senior infrastructure developer. And I used to be with Goldman up until very recently. And if you visit our site on cryptofacilities.com, you can trade a forward on the price of Bitcoin, which you can use to hedge your risk or to enter into a leveraged position, for example.
Hi, my name is Harry, managing partner of Binary Financial. We're a US-based hedge fund. Our main business is we facilitate large block trades for high net worth clients and institutions. So some family office or fund wants to buy like $5 million worth of Bitcoin, they'll usually come and talk to us. And then we also do trading and electronic market making of Bitcoin on spot and futures.
Well, thanks for the introduction. I'd like to start in a rather kind of open-ended manner. I'd like to ask each of the panelists, starting with you, Yves, why you specifically think that Bitcoin's a good investment. And then we'll drill into some of the details that you bring up.
Our point of view in CoinPlus is to look at the market and to say that we are focusing on regulation. And as Luxembourg is a positive on the Bitcoin, they try to propose an agreement, and you have to submit a file, of course, and to convince investors, private investors, that follow us in this wonderful journey. We just have to convince them that Luxembourg was the right place to set up a startup company inside the Bitcoin field. As we offer two services. The first one is the B2B payment processing, but the second one is the securizing Bitcoin inside the vault of the Bank of Luxembourg. And those two services can be very valuable in front of investors. So they follow us, and we are trying to get or to submit our file this March, and we hope that we get this first agreement very next trimester or semester.
Do you feel that there might be other regions, for example, Gibraltar or the Isle of Man, which would have a similar policy that would
Luxembourg is quite innovative in this field because they have to reinvent their own financial system. So they are quite very flexible, and they try to build something strong around Bitcoin. So the path is really hard, and you have to prove that you control every step of the process and you manage the risk. So in terms of pioneer, they are pioneering this inside Europe. About the legal side, we could maybe think of passporting this agreement inside the EU.
Okay, thank you. How about you?
Why Bitcoin is a good investment?
Exactly.
Bitcoin, it's hard to say that it's a good or bad investment. It is an investment, and it presents great upside if you get it right, but there's also great downside if you get it wrong. So it's a risky investment at the end of the day. I think what people lose sight of sometimes when they talk about Bitcoin as an investment and focus entirely on the price risk and is the operational risk that goes along with investing in it as well. Things like compliance with regulators, having correct processes in place, the exchange risk you take when you custody your assets with an exchange that isn't expert in cold storage, and the lack of insurance across the board. So I think it's a good investment or a bad investment. That's 10 years, we'll know the answer to that. I think the only really silly answer is to not take the proper operational precautions in that investment if you choose to make it.
So did you mean investment in currency, or did you mean in the ecosystem when you?
Speaking specifically about it as an investment in a currency, in conversations that I have had with banks, some of the bigger things that are keeping them out are the operational things like AML, the human processes and controls that go along with it. It's not necessarily the technology.
Okay, thank you. How about you, Pavel?
Yeah, we have to separate investment in Bitcoin and ecosystem. I can tell you one story. Recently, I met one company from Switzerland. They are doing trading with precious metals. And they went to Silicon Valley. And once they've heard that if they say that they're using blockchain technology, the valuation goes up like 10x, which means that we have kind of a bubble in investment in ecosystem. Everybody wants to invest there, or I mean, amount of startups is limited. Regarding investment in Bitcoin, I would say that everybody believes that it will go up once, just because the amount of Bitcoins is scarce, is limited, and the demand will grow as soon as more people will know about Bitcoin. So here is one problem, the understanding. Like I try to deal with it doing my courses and seminars, and still most of people, they believe that Bitcoin is kind of a Ponzi scheme or it's just another electronic money. At the end, it's too complicated for people to understand what is Bitcoin, how it works. It leads to not only a problem of understanding, but security, where as soon as people get the idea, they understand that, it's too much associated with some illegal activity or something like that. And at the end, nobody can guarantee that your Bitcoins are safe. Even if you have bought them, you have to store them securely. That's a big problem. So we have to educate people. Community has to do that. Even in this case, the price of Bitcoin obviously will go up.
Do you feel, though, that when it's classified as a bubble, it's different from a bubble that we know in the financial sense? Because the stock market bubble, people are kind of promised returns, and there's some institutions that kind of create that wave. But in Bitcoin, there's nobody really creating that promise. So, just in terms of a bubble or being overvalued, where does that really come from?
Yeah, probably it's coming from the same thought that the first company will be the most successful. So the first who integrates, it's not obligatory true, because it's decentralization of your business processes may help your business, but may not. Depends on, again, from industry where you're working on.
But thank you. How about you?
Well, as a relative of Mario Draghi, I cannot give any advice, any investment advice, but I can talk about some push and pull factors, in my opinion. First of all, I think that the decline of Bitcoin in the last months has a lot to do with the decreasing profit margin of mining. And so miners are forced to sell a larger share of their revenue to cover expenses, like hardware and electricity. And also the monetary expansion of Bitcoin, even if in the long term it will go to zero, but currently it's still at 10% per year, so that's somewhat significant. On the other hand, we have the monetary expansion, a very strong expansion, and also the velocity of the money changing hands is increasing. I'm talking about the euro, dollar, pound, or the yen. So with this abundance of liquidity, a part of this liquidity also might go to Bitcoin and cryptocurrencies. Then we have to consider that the Bitcoin market is not very liquid, which also means that if suddenly new investors come in, like if some investment trust gets the license, like I guess I think it already happened. I'm not sure if when exactly they will be launched at the stock exchange, but then this could be a major mover of prices. And technically speaking, as a technical analyst, we can see that the major correction still not be interrupted, but there are some technical patterns which indicate that the current recovery is stronger than normally a recovery would be in a major correction. So this is somewhat positive.
Yeah, that's the most rational explanation I've heard in some time. But since you did not mention speculation, what's your take on just speculative forces? I mean, you did mention some tangible things like power to run the rigs and for miners wanting to cash out, but what do you think about this speculation?
Sorry, can you say it
again? Did you have a take on just speculative investors who are kind of controlling the price, so to speak?
Oh, well, this is somewhat tricky because of some information which I can't talk about because of relationship with Draghi and so on. I mean, there are some guys at central banks which also have Bitcoin, and they're well connected, and well, insider trading is might happen, but yeah, it's tricky.
Well, good. You kind of dodged the question, but we'll grill you later. How about you?
Well, I think I have to agree with Kevin, you know, whether Bitcoin is a good investment or not right now or at any time is pretty tough to answer. I think the risk is very high, and I certainly wouldn't invest more than I'm willing to lose. But a couple of observations maybe on the behavior of the price. I mean, we all know it's really, really volatile. And I think one of the key reasons for that is, as you said before, there basically isn't any dividend, for example, coming out of it. So the price is purely, almost purely driven by future expectation. And future expectation, on the other hand, is driven by sentiment. So if you look at what the price did a year ago, we were at a bit more than a year ago, more than 1,000. And if you made a poll, I actually happened to read a poll that was made at that point in time, but was, you know, reposted on, I think it was Reddit a couple of days ago. People were expecting generally that by today it would be trading at higher than 5,000 up to 30,000. So this is just, you know, I think one of the key drivers. And right now we are probably a bit at the other end of this extreme. The prices come down a lot. Sentiment is not really great. So, I mean, I wouldn't be too surprised, you know, if that is a positive sign for the future development. But of course, you never know. But if you just look at the pure intrinsic value of Bitcoin, what you can actually use it for right now, it's hard to put a figure around that, but it's probably not more than a couple of dollars. So the rest is just expectation of what might come out of it in the future.
So you mentioned derivatives. I just wanted to throw out to you, well, since you were okay with me playing the devil's advocate, is that does it not create more complex instruments, and is it not very similar to what we have in Wall Street right now, in the sense very complex kind of derivatives which most people do not understand, but Bitcoin is kind of, I guess, easy for a layperson to understand as far as the money supply is concerned. You know, you leave the cryptography aside, but just how money is injected in the economy. So my question to you is, do you think derivatives are a good thing, and if so, then why?
Well, I think, you know, there are derivatives and there are derivatives. What some people are thinking of now when they hear the word derivative, they are thinking of CDOs on top of CDOs, you know, very complex stuff that no one at the end knew anymore, you know, who actually owns what and what is the risk of this. And that led to some bad things in the past, you know, in the traditional space. But the derivative space for Bitcoins right now is very simple stuff. For example, a future on the price of Bitcoin. So that's just, you know, a linear instrument where you can enter into a leverage position for the upside, or you can hedge your Bitcoins if you sell it short. So I think these really have use. I don't think they would add too much risk right now, because the volume in most Bitcoin derivatives right now is much lower than the spot volume. So I don't think it would lead to the dog being whacked by its tail at the moment. And they can be really useful for lots of things. Miners can sell their stock that they know they are going to mine in the future already now at the price now if they want to lock that in. You can hedge your risk if you own Bitcoin and you think the price might go down now. So I think it can add value. Of course, you have to make it safe and secure, and I don't think that is done at the moment too well in the space, and it's very difficult to margin for Bitcoin derivatives just because the spot underlying is so volatile, and you have to do that properly.
Okay, thank you. Yeah. So you can go ahead.
Okay.
Yeah.
So what's my view on kind of the pros of investing in Bitcoin and what's the downside? Well, I think if you take a look at the value of Bitcoin, if it's a good investment, look at what Bitcoin was worth when it started. It started out at 0, and then now it's worth $270. And you look at the amount of money that's actually going from venture capital into companies such as the blockchain. When people talk about Bitcoin and the blockchain, I think Bitcoin is probably the only investment out there right now for the general public where you can still potentially make a 10x or 100x on your money. That's our personal view. So we're pretty bullish on Bitcoin longer term. And what we actually believe is going to really help the price of Bitcoin go up is actually a combination of derivatives. And we've been saying this at other panels before too, is that to Timo's point, miners and merchant processors, a lot of the people that actually want to hold Bitcoin and are bullish on Bitcoin, they don't have to continue to sell Bitcoin. So by having derivatives, people can actually hold on to the Bitcoins. And for us as speculators, that's actually better too, because if we're able to sell futures and sell put options, we're actually able to capitalize more. So you're actually creating a much larger market, and more entrants and more speculators will actually come in, which will actually help the price of Bitcoin. So that's actually our view longer term. And you see this ecosystem, it's actually developing. There's a microcosm of finance in Bitcoin that's actually developing outside of the traditional Wall Street. And it's the single biggest innovation to happen in finance in the last 100 years. That's how bullish we are on Bitcoin. And one more thing to add, our chairman, who's invested in Twitter, Snapchat, Instagram, Tinder, all of these really successful companies, I asked him, what do you think about Bitcoin? Some people think it's really going to be big or it's going to be nothing at all. And then he said to me, anytime people actually think that something's really going to be big or not, it's actually going to be pretty huge. So that's kind of our view on Bitcoin longer term.
Well, glad to hear you on an optimistic note, but can I ask you that in terms of the stock market we have today, we have like excessive valuation, right?
Sure. And
so how is that different, investment in Bitcoin? Could it not be that there's excess valuation? And the current, a related question is, where is the value really coming from?
Sure, and I think the way you have to look at most investments is that there's always a herd mentality. People think that a lot of investments tend to be linear in price. Like, okay, the price should go up, like maybe like 1 or 2% every year, kind of like real estate. Technology does not work like that. Technology operates at an exponential curve. So look at companies like Uber. A couple years ago, Uber wasn't worth anything. Now it's worth $40 billion. Is that overvalued? Well, people don't actually think so. People are still putting money into it. I guarantee you the same thing's going to happen to Bitcoin. When Bitcoin starts to get traction and the price starts to go up, that's really, really when you're going to see an exponential move up. That's just how technology actually happens. In terms of overvaluation, I think you have to look at Bitcoin as there's really, really two things when you're investing in Bitcoin. One is investing in Bitcoin, and one is investing in companies in the ecosystem. Some people will argue that it's better just to invest in Bitcoin, but not to invest in the company. Some people do both. And we actually think that the Bitcoin price is a barometer of health. It's kind of the canary in the coal mine of how much value Bitcoin companies are going to be worth. So we've invested in Bitfury. Everybody knows that. So the value of Bitfury, they mine the most Bitcoins right now out of all the companies out there. So what do you think the valuation of Bitfury or any of these companies are going to be that hold a lot of Bitcoin? Well, their values are going to go up in relation to the price of Bitcoin. So,
I mean, it will go up even faster than the price of Bitcoin?
I think with the valuation of the companies, a lot of people don't like to say this, but they're tied directly to the price of Bitcoin. Because if the price of Bitcoin is 0, hate to say it, like people aren't going to want to invest in Bitcoin companies. If the price of Bitcoin is high, that's going to give higher valuation to a lot of companies that actually hold Bitcoin or are in that space. That's kind of our view and our take on it. So right now is actually a great opportunity to actually invest in Bitcoin and Bitcoin companies because the price is low. Everybody last year was complaining about, oh, I wish Bitcoin was $300 or $200. I would buy more. Well, here's your opportunity to buy.
So as far as investing in individual companies, it's not for the private investor, right? You're talking about more institutions.
I mean, you can still, there's a lot of syndicates out there on AngelList. You can, be part of syndicates. So if you actually want to invest in companies, you can do that, or you can start your own. There's a very, very healthy ecosystem of accelerators, such as Boost, 500 Startups, a plug and play. So if you have a great idea with about building a Bitcoin company, there's a huge opportunity to do that right now. There's a lot of investors in that space.
Cool. Another theme I kind of always hear is about risk. So I'd like everyone on the panel to kind of identify what they see as an investment risk and how you, either as an individual or an institution, could safeguard against that risk.
Yeah, about risk. We first convince the early investor that invest in CoinPlus by saying that we could have an entry barrier getting the first agreement of the Luxembourg or getting one of the first agreements in Luxembourg. And it seems that a lot of companies are asking Luxembourg how to set up something there, how to get an agreement because of the financial place and the IT infrastructure and the business environment. So the risk about that, we just say our investor that putting an entry barrier with this agreement, as to say the regulation, is maybe something that can lower the risk because of the process you have to prove about the organizational aspect of the company. That is one of the main risk management that we have to deal with. And so that's a difficult task to do. It's quite like all the payment processor companies have to deal with. And it's probably one of the two barriers we got. The second one is to securitizing Bitcoin offline inside the vault of the Bank of Luxembourg, which is a good side of the risk management about securitizing Bitcoin offline.
So you're kind of addressing the technical risk and also the kind of policy risks. So your point was that as an individual investor, you should study both of these aspects?
Yeah, as Kevin said, we have to respond to AML policies, very precise AML policies and KYC, etc. And it's quite time-consuming to set up an organization like that. Means that you convince the regulator as well as you did with the investor. So it's a risk management that you have to deal with.
Okay, thank you. How about you, Kevin?
I'll talk about every risk that's not about price, because the price risk is what it is. There's three types that I would probably highlight. The first is compliance risk. These are things that we see people not spending enough time on, because they're easy to avoid, because they're hard to do, and they're really boring, and you can't have a cool press release when you do them well. But compliance risk. So are you having the right capital reserves if you're storing assets on behalf of a customer? Do you have the right processes in place with the local governments, with registration, with registered custodians? Are you doing those things well? Things like, I would talk about catastrophic risk. We see a lot of people building businesses and wondering why no one wants to give them money. And it's because, in part, they haven't thought about what would happen if their business ceased to exist. Now, it's a horrible thing to have to think about, but it's a very rational thing to prepare for, and a very reasonable thing to show your clients that you have prepared for. So what happens if everybody in your company is on an airplane and disappears tomorrow? Where do all the Bitcoins go? How do you get them back? Who has ownership of them at any given moment? Those are questions we work with our clients to answer, because we don't see them being answered enough. And the third one would be operational risk. It's the technological side. We believe firmly that technology, best in class, which we believe we have, can only ever be 50% of the solution. The other 50% is the human side. So yes, you can have the best cold storage wallet in the history of the universe with 99 out of 10,000 multi-sig, but if you don't have the right people in place, or if they're being exposed internally to things, and you don't have, even if everything does go wrong, if you don't have the insurance in place to cover for that, because you can never cover off every problem that humans can come up with, you're exposing yourself to more risk than you need to take.
So what I'm hearing is that it's kind of at the edge of the realm of a private investor to really look at all this stuff. Do you agree?
Yeah, so you know, and hedge funds run into this as well, where it's the difference between primary diligence and secondary diligence. So you can do primary diligence and go through and audit any company you're looking at working with or investing in, every single process they have. You can read the code base, you can go to their office and make sure that the CTO doesn't have access to certain things that the CEO has access to. And funds do that. There's also secondary diligence, which is what most of the world functions on, where you have a trusted party that performs an audit or diligence on the person in question and certifies that it's being done properly. And that's what we go for.
Sounds good. Thank you. So Pavel, I guess you're going to address the cryptographic part of the risk, right?
Yeah, I will answer to your question from security perspective, and here we have two aspects. First is user security. So it's about multi-signature, it's about hardware that can be used to store your bitcoins. So here, yeah, the appearance of startups that do multi-signature really user-friendly is crucial, like Green Address. It's a good example. Probably we need mechanisms that allows you to pick up your own key generation sources. So imagine that you can generate 3 keys on completely untrusted environment and then combine them into the multi-signature, and it's no way to just hack them because the hacker will not know which machines were used to generate these keys. Second thing is that industry will mature only when we will have the certified hardware. Right now it's Trezor, Ledger, but it's not enough. We need more advanced techniques, more advanced hardware. So normal, ordinary people will believe that that's enough to store their bitcoins. And it will be some insurance that covers risks that maybe of some insider job, something like that. From the other side, it's still a lot of challenges for Bitcoin infrastructure in general, from cryptography point of view. For example, if you see back to the history, how cryptography mechanisms were created, you can see that the key length is just skyrocketing. Like RSA key was said enough, like 512 bits 10 years ago, and right now it's 2048, and which is not very good. So in 10 years, the security of existing Bitcoin cryptography may not be enough to cover all risks to be protected from government agencies like NSA. So Bitcoin development has to put this into the pipeline to increase the security of mechanisms, length of hashes, length of keys, and there should not be obstacles between that. The other concern is who selected the system parameters for Bitcoin. We know that Satoshi selected them, but there is an opinion that it's obviously the elliptic curve that is used in Bitcoin is not the certified one. They use quite extravagant curve. It may be a risk. From the other side, people like Bitcoin people don't trust system parameters that were selected by government-approved agencies. That's obvious. So it's possible to upgrade Bitcoin in a way so a few system parameters will be used at the same time. For example, each transaction will be signed by 2 different signatures that use different system parameters. So even if one is broken, then another one is still stable. That could be one approach to prepare for future attacks. Also, we have to remember that quantum cryptography is coming, which means that in the nearest 10, 20 years, the existing signature schemes and encryption schemes might be broken. So this is also has to be put into pipeline, what we are going to do. Maybe we will use like Lampert signature schemes or Lampert or just quantum algorithms again to make signatures. So it's a lot of things to watch, and obviously Bitcoin should not be frozen. It should be probably frozen from economical perspective, but not from cryptography perspective.
So you did cover a really wide range of issues, but kind of just to frame it, I think one theme was that the cryptography of Bitcoin itself. Now, that's something that's not in your control. So if you don't trust elliptic curves, you're kind of out of luck, right? So that's my first point. But my second point is that there are ways in which you can create a key pair very securely. I'm sure everybody's read that on the internet. You know, you can go into your basement and just write random numbers on a piece of paper, plot the curve, find the public key, print it on a printer, then destroy your computer, destroy your printer, and keep your key in the safe. So can you kind of tackle each of the issues separately very briefly?
Yeah, I mean, the generation of random seed which is needed to generate your key, again, is a very complicated task. People are not good sources of randomness, people's brain. So you need to use some hardware, and again, it's better if you can take the randomness from different sources and then combine them into multi-signature. In this case, yeah, as I said, you can even use completely untrusted computers to generate the randomness. But for consumer market, I'm sure that hardware devices will be used. There are a couple of projects that try to build like a credit cards that have a chip that does all the transaction processing and key generation. So yeah, that's probably the future for consumer market.
Thank you. I'm going to move on.
Yeah, beside some things which already have been said, I see the risk that although Bitcoin has a huge market share, it still has a very small market penetration. So this means that if a huge competitor, some major tech company, would decide to enter the market and spend maybe billions of dollars in marketing, that company could fast get a higher market share through increasing market penetration. Also, most consumers, they tend to trust brands, famous brands, and not that much technology, especially if they don't really understand the technology. Yeah, I see that as a risk.
So just to be specific, were you thinking about like a 51% attack on the network, or was it more subtle than that?
Are you asking this in
I'm
connection
asking
with what I have said? Or?
Yeah, exactly. So.
Oh, no, I don't think that some major tech company would try to do a 51% attack. Maybe the NSA may do it, but at some point. I mean, that's pure speculation. I'm talking about some tech company really saying, okay, we believe in cryptocurrencies or electronic currencies in general. Let's push this through and let's make our coin the most widely known.
Thank you.
Yeah, I mean, I think there are lots of different risks in Bitcoin. Kevin has mentioned regulatory and operational, and I think Pavel, technological risk. Maybe if you look at it from a market perspective, I would add market risk and credit risk. And market risk would basically be the risk, if you hold Bitcoin, that you lose money. And there's not really anything you can do against that if you want to be exposed to Bitcoin. That's just part of the game. Credit risk is slightly different. I mean, that's something that is bad because it's not really necessary. And in the past, it has been a really big risk. I mean, we have seen exchanges going down, people losing their money. So that's one type of credit risk. And the reason why it is so high is that the standards are not appropriate. If you look at it from a derivatives perspective, then it really becomes a financial engineering problem. How high do I have to margin a product to be sure that the winner in a trade will be paid by the loser in the trade, and actually the loser just won't default and not pay what he is due. And if you do this, then one thing you can do, for example, is to look at historical prices of Bitcoin and how volatile Bitcoin actually is. And if you do that, it is really, really volatile. I think the standard, the annualized standard deviation, which is the volatility, is above 100%. So if you compare this to, for example, equities, that would be maybe in the 20 to 30% range. For FX, it's maybe 10%. So it's really, really high. And the question is also how much, if you have a trade on and this trade has a certain close-out period, if someone runs out of money, then it has to be closed out. How long will it take me to close this actually out? And you have to look at how much collateral do I have to collect to bridge this close-out period. And if you do this, if you look at historical prices, you can see, for example, that Bitcoin, can move up to 20% within 1 hour, or has done that in the past. So this is extremely high compared to the traditional space. And if you want to margin a product, then you have to, set collateral limits high enough to cover such a thing. So I would say in practice, to be really specific, I don't think you can set up a leveraged product on Bitcoin with leverage more than 3 times.
There's a kind of universal rule that don't put in more money than you're prepared to lose completely. So I guess as an investor, you want to do better than that. Is there any way you can do better than that and still come out ahead? Any tips for that? Well,
I think there are investment strategies, and some of our institutional clients are interested in putting these on, which are not completely vanilla. One strategy we have been asked to look at is an overlay strategy, for example. And this is for an hedge fund in the institutional space. And what they want to do is basically they have clients who hold Bitcoin, and they want to put a strategy on top of this Bitcoin holding that protects the client if the price goes down, but that retains the upside when it goes up. And one way to do this is, for example, you have a trend following model that gives you a signal when a downtrend is reached, and if that happens, then you short your exposure, you short Bitcoin, and this way hedge your exposure to the downside. And when the trend is reversed, you resolve this. So you actually never really sell your Bitcoin, you just put something on top to achieve this payout profile.
Okay, thank you. It kind of sounds complex, but we'll leave it at that.
Yeah, so
How about you,
to Timo's point too, I think layering strategy, even derivatives like selling put options as they become available. But yeah, Bitcoin, to answer your question, is Bitcoin risky? Yes, it's probably the riskiest investment out there. We tell people it takes balls to trade Bitcoin. And actually bigger balls to hold through. I know a lot of people that have actually held through the current trend right now. So yeah, it's definitely a risky investment, but big risk, big reward. Right now, most people though down the road will probably be complaining that they wish they had bought more Bitcoin. So that's kind of how we look at it. So yes, it is risky.
Okay, thank you. I think we kind of did our round, so I'm going to hand it over to Stuart. Their questions.
Hi, I've got a few questions. Well, we're talking about derivatives, and so what fuels the price, the commodity or the derivative? So, like I believe in the gold market, you know, every day there's probably as much paper gold bought and sold as mined in 1 year, and so, you know, right now when I look at Bitcoin, I look at the futures. You know, around settlement time, the spot price is really pushed around a lot, and this is I don't know if everyone's aware of this, but so right now I see the futures already pushing, you know, the derivative market is pushing the price around a little bit. So yeah, what pushes the price? The derivatives or the underlying asset?
So who did you want to answer the question?
I guess you two guys on the end were talking about it more, right?
So you want Timo to answer it, or you want me to answer it?
Or either however you want, whatever. If you have or if you think you have the same opinion, one.
Okay, sure. So the question is, what drives the price of Bitcoin?
Yeah, derivatives or
is it derivatives or the spot price? And I think, actually, if you look at the futures market right now in Bitcoin, I'll just use OKCoin in the China market because that's actually the largest futures market right now. Keep in mind that these Bitcoin futures are actually Bitcoin denominated; they're not US dollar denominated. And the OKCoin and the Huobi, all these other big exchanges, they typically give you a leveraged product. So you see huge volume on these, but then they also have what's called like a clawback, so that, you know, if the futures like don't settle up or like there's a huge dip in the price, everybody get that actually made money gets taxed. So we kind of stay away from that market. We think that that's a gambler's market. The only ones that we've really seen that don't have that tax is actually BitMEX. So, you know, what kind of really drives the price right now? I don't really think the futures kind of lead the way a little bit, but that's just really because of China, because China right now leads the price of Bitcoin more than anybody else. And the reason why is there's a lot more, even on the spot side, there's a lot more retail trading that goes on in China than anywhere else in the world. So my view is that right now the futures kind of lead the way, but it's actually really more just like the speculators in general. Yeah.
Okay. And yeah, I mean, you said, I'm sorry, what's your name?
Timo.
Timo. Hi, Timo.
Hey.
Yeah, you said you can 3 to 1 is probably the highest. I mean, okay.
Sorry, what is the highest?
Oh, leverage, 3 to 1.
Yeah.
Or 3-3-1 or whatever. I mean, you got OKCoin 10x, 20x, 796, 50x.
Yeah, I mean, you know, I don't think these are real derivatives as you would define them if you look at traditional derivatives. I think these are, as Harry said, it's more like a gambling product, and it's not, in my view, safe to trade anything that is higher than three times leverage. Yeah. And the issue that you mentioned, you know, whether now the spot drives the future price or the future the spot, I would think that if you look at real derivatives in the Bitcoin space, it's definitely the spot driving the derivative. If you look at some platforms where you can trade futures, these are not actually futures, I would say. It's more like leveraged trading. It's like you actually borrow funds to bump up your position. And if you do this, then I agree. You know, the spot price becomes influenced by that. In particular, you know, when the price decreases and people are forced to liquidate, then it decreases even further, you know, inducing further liquidations and so on. So it's not really only unsafe for the derivative. So on top of that, it also makes the spot price, the spot market, unsafe.
Okay, thanks. Do you think we just had a short bubble?
Sorry, who do you want to answer that question? No, I don't think we're. Sorry, from what price to what price? So the question is, do we think? Oh, okay. So the question is, do we think that was a bubble from 460 to 160? And the answer is no. I don't think that was a bubble. It's just Bitcoin volatility.
Timo, right here.
Yep.
Hi, I'm an asset manager and interested in derivatives. Could you say a bit more about margin accounts? How you deal with them, given this volatility?
So I can't hear you really well, I'm sorry.
Can you say a bit more about margin accounts, given this
yes.
volatility? And also, when you offer futures or forwards on Bitcoin, do you offer doing trades with physical settlement or cash settlement or both?
Right.
How do you deal with that? It's very interesting because given what this gentleman earlier said about what's going on in the gold market, this game of manipulating the gold price downwards obviously is only possible when you have a lot of cash settlement rather than physical settlement. And how will this be in the Bitcoin world going forward?
Okay, let me maybe start with your second question. I think so. How do we settle it? On our platform right now, we only take Bitcoin as collateral. The difference between our platform and maybe some others is that the forward that we host is linear in US dollars. So if you enter at 300 and you sell at 400, and you actually have made 100 US dollars profit. So it's not a multiplier of the Bitcoin price or anything like that. And then you get paid this 100 US dollar in Bitcoin at the exchange rate when you leave the trade. As for margining it, there are two things. The first thing is it's much more volatile than traditional asset classes. For example, if you have, say, an equity future, you probably have to put up margin something around 10% of notional. In our case, it depends on whether you're go long and short, but it's 50% for a long position, so it is much higher. On the other, so this is because it's so volatile, but on the other hand, Bitcoin is a 24-hour market, so you can actually liquidate if someone runs into a loss continuously. So you don't need to bridge, say, an entire one-day gap risk. It's enough to bridge, say, a 1-hour gap risk, which makes it, again, doable. Otherwise, you would probably have to collect margin, around higher than 50%, say 70 or something. And then it's not really a derivative anymore because you have to put as much, upfront as you want to trade.
Hi, my name is Hakim. I'm from Seedcoin, the incubator. I've got a question for Pavel. Pavel, earlier you mentioned Bitcoin security and you were talking about the solutions such as Trezor and Ledger. What do you think about the trusted execution environments such as the one that Rivets is looking to implement? Are you familiar with that?
Yes, that's a very interesting idea. It's not too easy to do that. You need to invest a lot of money into the system environment where your display trusts the processor trusts the audio port, and then they trust memory together. And there is one, I've heard about Rivets, I talked to the CEO. There is another direction of doing trusted calculation, which is completely software way. It's based on zero-knowledge proofs, so-called SNARK. So you can prove remotely that you calculated certain code in the right way, even if you cannot control the environment, the hardware environment. This research, I met a professor from Technion, Eli Ben-Sasson, who is working on this problem. It's really challenging, and probably in the next few years we will have the solution which is efficient enough to be implemented in consumer devices. But yeah, both directions are very prospective. Hardware, Intel already has some kind of this technology, trusted calculation, plus software calculation. So we need that, yeah.
Time for one last question. Anybody on this side of the room? No? Well, you know what, guys? That was a great panel. That's one of the best investment panels I've seen in a while. We've got a real diversity of opinions. And good job moderating, by the way.
Thank you.
Let's give him a big round of applause. Nice job.
Thanks, guys.
It's not easy when you have a big panel.